Well, hi, everybody, and welcome to the Buffett and Beyond Stock Analysis Video Podcast with your host, Dr. Joseph Belmonte, which is me, and Debbie with a Y. Hi, Debbie.
Just me. Hello.
And all these methodologies are based on the book Buffett and Beyond, second edition by Dr. Joseph Belmonte and published by Wiley Publishing. And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. Now remember, folks, the clean surplus return on equity is both a comparable and a predictability model and is totally different than the traditional accounting return on equity. So don't get them mixed up. And you can equate the clean surplus return on equity as the interest rate you get from a bank. So this is common sense now. A bank account with a higher return or interest rate will earn you more money than an account earning a lower interest rate. So it just follows that portfolios made up of stocks with high clean surplus ROEs or return on equity will outperform other portfolios made up of stocks with lower return on equity or interest rate. So think of your bank account when we talk about these stocks. The good.
Stocks that should be in our portfolio.
The bad.
Stocks that should be in somebody else's portfolio.
And the ugly.
Oh, stocks that should be in nobody's portfolio.
Okay, let's get on with some stocks. You'll see exactly how this method works and how we here at Buffett and Beyond set the investing parameters so that you, all of you, can outperform most of the professional money managers out there in investment land. And this week we're going over the human resources industry. And folks, that term was not even around when I first went out into the workforce. And today we're going over Insperity, which most of you have never heard of. And folks, this stock is in our growth portfolio and just went up about 35% over the past couple of weeks because of better than expected earnings. And we're also comparing that stock with Robert Half, which most of you have heard of, and the Manpower Group. And yes, that's all one word there, folks. And you've all heard of this company. Okay, Debbie, what's our first stock in the human resources industry?
All righty, JB. Up first, we have Insperity. Insperity provides a wide array of human resource and business solutions. Its workforce optimization solution offers a broad range of functions, including payroll and employment administration, employment benefits, workers' compensation, and government compliance, along with training and development services. On March 3rd and 11, the company changed its name to Insperity from Administaff. Administaff.
And the new name is worse than the old name.
Yeah, okay. And they employ approximately 2,900 people as of 12/17, and they have 68 offices, including 60 sales offices in 29 markets.
Yeah, I wouldn't buy this stock from its name, but boy, the numbers are sure good. Let's look at those numbers right now. And let's go over that clean surplus ROE. And folks, remember that in order to get into our growth portfolio, we want to see an ROE of 20% or better. And this stock projected for 2019 is double that of the 20% that we're looking at. And you can see that this stock is just rocking out there, folks. But I want to show you something back down here in 2015, 2014, and the 4 or 5 or 6, 7 years before that, is that when we have a no growth economy, you can see that the stocks, and this is the same case in all the stocks that we've been looking at weeks and weeks and weeks, is that during this time period of 2009 to 2015, we had very, very slow growth in this economy. But now that we have a pro-growth economy, you can see these stocks are really picking up in their returns and their efficiency, which means they can compete with the companies, the best companies overseas. And that's what this is all about, folks. Just don't think locally, think about the entire world economy. So anyway, and here we have a company that can compete any place in the world. And let's look at the net income growth, and it is about 40% more than the average stock, and we're talking about for 2019. And the revenue growth of 11.5% is about 60% more than the average stock revenue growth over the year of 2019. And also notice that the retention rate, or the amount of money the company is putting back into itself in order to grow, is about 80%. It's paying out a small dividend, but 80% of what it is making goes back into the company in order to grow, which means 20% is going toward the dividend. So we like this in a growth company. We would rather see all the money the company is making go back into it, but 80% is very, very nice there, folks. And looking at the past year, this mustard colored line is Insperity, and you can see that it's up about 95% for the past 12 months, while the market, this black line down here, is up about 4 or 5%. So yeah, this company is really rocking it. And over 5 years, and folks, I wish we had it for the past 5 years, but we don't. It is up almost 900%, with the market up about 50%. Okay, Debbie, what's our next stock?
Alrighty, up next is Robert Half International Incorporated. It's the largest specialized provider of temporary and permanent personnel in the fields of finance and accounting. They also provide staffing for administrative, clerical, paralegal, legal support, and IT positions. They have 323 staffing offices in 42 states, D.C., and 17 foreign countries. Operated 56 Providity branches in 23 states and 11 foreign countries. Foreign revenues represent 22% of the total. In 2017, they placed 211,400 temps, and they have about 17,200 full-time employees.
Yeah, it's a pretty big company, folks. And let's look at the numbers and see what these folks are doing. And looking at the clean surplus ROE for Robert Half International, you can see that the clean surplus ROE at 17% is about half that of the company we just looked at, which is Insperity. So you can see that this company, even though it is above average, we expect a better than average performance out of this stock. But you can see this company has had about a 17% ROE on average over the past 6 or 7 years or so. And then when we look at the net income growth, it's lower than average, and revenue growth is about average. So going back to the retention rate, we can see that it's putting 68.8% or about 69% of what it makes back into the company to grow, because the rest of it, 32%, is going to pay that dividend. So it's got a fairly nice dividend of 2.3%, but because it's putting less money back into the company in order to grow than is Insperity, we would expect Robert Half to underperform Insperity, and that clean surplus ROE tells us exactly that. And looking over the past 12 months, the past 1 year, we can see that this stock is better than average, because that clean surplus ROE tells us it's better than average, because the average stock in the S&P 500 has an ROE of 13.5%, and this stock has a clean surplus ROE of 17%. So Robert Half is up about 18% over the past year, while the market is up a couple of percent over the past 12 months. And then over 5 years, with the market up about 50%, this stock is up about 65%. A nice difference in there, folks. It's doing pretty well, better than average company. And Debbie, what's our final stock in the human resources industry?
Okay, up last on this podcast is Manpower Group Incorporated, and they're a world leader in innovative workforce solutions and services. Its global network spans nearly 2,700 offices in 80 countries and territories. Major geographic markets include the United States, 13% of revenues, Southern Europe with 41%.
Yeah, that's you would think they were bigger in the U.S. here, because we've all heard of them.
Alrighty, and Northern Europe is 25%, Asia Pacific, Middle East, 13%, other including parts of the Americas, 8%, and they have 29,000 full-time employees.
And once again, another pretty big company, folks. So let's look at their numbers and see how they're doing relative to our other two stocks. And when we look at the clean surplus ROE on Manpower, we can see that it is declining. That means it's still making earnings, and the earnings are still going up, but it is going up at a slower rate each year. The market does not like that, folks. And why is that clean surplus ROE going down, and why is it below average? Well, the net income income growth over here is negative for 2019, and the revenue growth is just about flat. Even though it had good net income growth for 2018, it does not have that kind of growth, or has negative income growth for 2019. So with an ROE for 2019 below average and net income growth to be negative, now this is the growth we're talking about, not the net income, but the net income growth is going to decline this year over 2018. So we don't expect this stock to be performing better than the average, which is why we will stay away from it. And when we look at the past 12 months, we can see Manpower is down over 30% while the market is up about 2 or 3%. And over 5 years, we can see that this stock is up about 7 or 8% while the market is up about 50%. So let's look at these three stocks together, and there's no doubt Insperity clean surplus ROE at 38%, above average net income growth, above average revenue growth. We expect this stock to continue to outperform. And the ROE, again, of Insperity is 38%. The next stock, Robert Half, is half of that exactly of Insperity at 17.2%. But Robert Half is still an above average stock when it comes to their operating efficiency. And then we have Manpower, which is below average, and we expect Manpower to underperform the market going forward. And when we look at the 5-year returns of these stocks, once again, we can see that Insperity up almost 900%, let's call it 875%, while the market is up about 50%. And if you're watching this, the market is the black line, and the red line is Robert Half, outperforming the S&P 500 by a tad, and Manpower underperforming the S&P 500 by a long shot. And of course, our favorite stock right here is Insperity, up drastically over the past several years, folks. It is a good stock, and it is making money, and it continues to expand. And when you think of this stock, Insperity, we are looking at a company that hires your employees and then leases them back to the company. So the company itself does not have to worry about individual payroll. They don't have to worry about the pension plans. All they worry about is doing what they do best in their individual company. And that's what Insperity does. It does it all for small to medium-sized businesses. And folks, it has a contract with American Express, because American Express handles a lot of small to medium-sized businesses, and American Express owns a small percentage of Insperity. And this was a good move for Insperity, because look at these results over the past 5 years. This company is just performing fantastically. And yes, we have Insperity in our portfolio. And I just want to mention one thing. One of the main competitors to Insperity is Paychex. And guess what? We've had Paychex in our portfolio for the past 500,000 years or so. It is in our dividend growth and income portfolio because it has a very nice dividend, and it is growing that dividend quickly. So Insperity is in our growth portfolio, and Paychex is in our dividend growth and income portfolio. And folks, we are very happy with both of these companies.
Well, JB, I think we've just about covered all the questions sent in by our listeners out there in investment land. And remember, folks, we're here to answer your questions not only about individual stocks, but also about the stock market in general. So keep those questions coming, and who knows, we may even answer a question or two you didn't even know you had. And that's about it for today, JB.
Okay, folks, don't forget, if you want to receive a full free month of all our letters and complete access to our computer program, just go to our site, BuffettandBeyond.com, and sign up. Remember, all you need to manage your own portfolio, and it's free. Hey, just go to BuffettandBeyond.com, and remember, Buffett is spelled with 2 F's and 2 T's. That's BuffettandBeyond.com. Okay, folks, we had a great day today.
And tomorrow will be even better.
All right, bye, folks. We'll see you next time.
Bye, everyone.
And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. We've had a good week, folks, and here's hoping that next week will be even better. You have a safe weekend, and we will see you next time.